Hello and welcome to our coffee class with Mr. Elias. Again, having a tea, still it's a coffee. I mean, the class is coffee class. Well, within this 10-15 minutes, we're going to learn so many good accounting. Today is management accounting day. Sunday is fun day. Quite a few students are here already. Thomas, Mohammed, Claire, and Teresa is trying to join in. Welcome. Are you ready to start? Ready to rock and roll? Write me something you can tell, unmute and say yes. Where is Thomas? Where is Teresa? Yeah. I hope you can see my screen. Do you? World-class BPP course materials. This is a book from ACCA. It's a bit of advanced level, performance management. We used to call it F5, like part 2, ACCA part 2. F5 performance management, and the book is from BPP, approved learning partner, approved book publisher, and a very popular, the very latest book, which is valid for this year as well. Quite a few chapters are there in management accounting, but we're going to start with the basic one. Today's topic is cost, volume, profit. Nice and interesting. CVP analysis. And guess what? We're going to finish the chapter in 10 to 15 minutes time. Yeah. So get ready with your pen and paper. People are writing to me like, yes, Muhammad, yeah, ready to rock and roll. Brilliant. Well done. I hope you're ready with your pen. And my digital board is in front of me. You have your own pen and paper. Here is the chapter. Chapter number 8, cost, volume, profit. CVP analysis. Now, management accounting is all about decision-making, internal decision-making. And to do good decision, you need to go over with the planning. We plan, then we control, then we take a decision, right? So in this particular chapter, we're going to learn minimum 4 formulas. Number 1, BEP itself. BEP, break-even point. Number 2, contribution to sales ratio. Number 3, margin of safety, MOS. Number 4, target profit, TP, we call it TP. So 4 formulas. I hope everybody knows the formula of contribution. Let's start with that. Contribution, sales minus variable cost is your contribution or contribution margin. If your sales is per unit £10 and variable cost is £6, you take away £4 is, you call it what? Contribution per unit. Am I understood? Yeah, nice and easy. Contribution. Now this CVP analysis, again, why do we do in our company? Why do we do break even? We're going to learn about break even, margin of safety, target profit, even contribution to sales rate. Why do you do? To take a good decision. Or shall we keep producing that? Like this is a product pen. Shall we be producing and selling this pen or not? And obviously, if it is a profit-making product, we're going to do it. But there are so many other items associated with. So here you go. This is what you're going to learn in this particular chapter. First one, please write the formulas. First one. Number 1, BEP, break-even point, fixed cost divided by contribution per unit. Be careful with that. More students are joining in, but our class is very simple, smaller class. Yeah, I mean, short term. Within short time, by the time we finish our coffee, we master our management accounting. Sunday, management accounting. So break-even point, fixed cost divided by contribution per unit. I'll come back to what is a break-even point. Just write down the formulas. The second formula, please write it down. CS ratio, contribution divided by sales, whether contribution per unit or sales per unit or total. It's the same thing, contribution divided by sales. What does it give you? The higher the contribution to CS, the better. The third one I told you, MOS, margin of safety. What is the formula I have written? BUD sales. BUD means budgeted sales. Budgeted sales, huh? BUDGETD, budgeted sales minus break-even sales. Write the formula, please. And then target profit, fixed cost plus target profit divided by contribution per unit. Please write it down. 1, 2, 3, 4. Yeah. Break-even point, CS ratio, margin of safety, target profit. Now let's talk about one by one. Yeah, break-even point. What is a break-even point? This is such a point where there is no loss or no profit. This is the formula or book answer or general answer. Break-even point is such a point where you cover all your cost. Am I understood? For example, 10,000 of the pen we are going to produce and sell. So there could be fixed and variable cost of the 10,000 pen. If we sell 6,000 pen, all our costs are covered. That 6,000 is my break even. Okay, below 6,000 is still I'm at loss. Above 6,000, good. That is margin of safety. Yeah. So break even and margin of safety goes side by side. So for the time being, break even point is such a point where all your costs are covered. At that point, like 6,000, I told you 10,000 I'm gonna sell. But of that 10,000, when I actually sold 6,000, all my costs are covered. So 6,000 is my BEP. How do you do in your real life example or your questions in your exams? You do fixed cost divided by contribution per unit. Remember, not total, unit contribution, yeah? Per unit. Fixed cost in total. Fixed cost, total. Like fixed cost in a business could be £50,000 and contribution could be £10, £2. You do divided 50 divided by 50,000 divided by 2. Equals to you get the units you require to sell. So it's a good tool, isn't it? If you know how many items you need to sell to reach your break even, you will get a target like, I must sell 6,000 to cover my cost. Then above that, anything you sell is your margin of safety. So I hope you got the break even point, right? That's your break even point. And the margin of safety, I already told you, like margin of safety, it's the budgeted sales minus break-even sales. Like I thought my budget sales was 10,000, but break-even was 6,000, wasn't it? That means after break-even, anything you sell is your margin of safety. Here, break-even was my 6, then we sold until 10. We sold 4,000 units, MOS, margin of safety. And CS ratio, contribution divided by sales. Yeah, nice and good. One by one, showing you with a quick example. People, get ready with your pen and paper and writing pad. You need to answer me. Yeah, you need to answer me through the writing option chatting box. Also, you can unmute and talk to me. Let's do one activity and finish the chapter in style. A company has a fixed cost. Nice and easy. Always will be given to you. Before it gets colder, let's enjoy it. So that's you enjoy your coffee. A variable cost 650 and some more information 1, 2, 3, 4, 5, 6 information given. Look at the first one. Let's see if the selling price given £8 per unit. What is the BEP? Before I go to the BEP, I know my BEP formula is fixed cost divided by contribution per unit. Now my fixed cost is given 5,700. How much is your contribution? Tell me. Who tells me? Who writes me the contribution? How much is the contribution here? What is the formula for contribution? Sales less VC, isn't it? There you go, Thomas. Well done. Brilliant. Thank you. 8 minus 6.5. You said 1.5. I agree with you. 1.5 is the right answer for your contribution. Okay. So how much is the break-even point in units? Give me the answer quickly, quickly, quickly. Work out on your calculator. I'm taking my digital calculator. People are getting some answers. So fixed cost was how much? 5,700, wasn't it? Divided by contribution per unit. Come on, more people give me answer. Thomas, I believe you're right. 3,800. That's correct. So if you can sell this many units, 3,800, all your costs are covered. You get peace of mind. Above that, that level, you get margin of safety. Second one, what is the break even in terms of revenue? You know, this is units. How do you get in terms of revenue? There are different formulas like fixed cost divided by CS ratio. You can do CS ratio, or you can multiply 3,800 with selling price 8. That's the easy way of doing it. Like, okay, 3,800 units we're going to sell. Each unit we're going to sell at £8. So times by 8. Does make sense? 30,400, wasn't it? 30,400. That's how we do this one. What did I say? Another one? Fixed cost divided by, thank you, Claire, for your answer. Fixed cost divided by CS ratio. How do you get CS ratio? Contribution divided by sales, don't you? Yeah, how much is the contribution? 1.5 divided by sales, 8. How much is your CS ratio? Who tells me? I know it's a little messy writing, Messi and Ronaldo. Okay, but get your figures. It's good to get your figures divided by 8. Your CS ratio is 0.1875, right, Olufe? Yeah, 0.187. I would say write all of it. Not just 0.18. Yeah, keep it there. You know, I told you, even if you divide fixed cost divided by CS ratio, you're going to get the same figure. Fixed cost is this divided by CS ratio, what did we get? 0.18, wasn't it? Yeah, hold on. 5,700 divided by 0.1875. There you go. Do you see it? The video is recorded. It can take help. We must move ahead. What is the CS ratio? Oh, we done the question. We done the answer here. I just didn't remember that they're going to ask the same question later on. That's our CS ratio. Okay, let's see the next one. Budgeted sales given. What is the margin of safety? What is the formula? Budgeted sales minus BEP sales, isn't it? Budgeted sales is my 5,000 and BEP sales is this one, yeah? 3,800. 1,200 should be the right answer, shouldn't it? Huh? Is it too difficult? I'm telling you, you're doing an ACCA book. Most of you are AAT, CAT, FI students, but this is an ACCA skills level, like part 2, halfway through of your ACCA, and how easy it is. See, coffee classes are that easy. A couple of more, we finish the chapter. What is the margin of safety in terms of percentage? You know, like at first you need to get the margin of safety. Our MOS margin of safety is 1,200, yeah, and divided by budgeted sales. Yeah, we will work it out. 5,000 equal times by 100. You better do, because they are a percentage. Times by 100 equals 2. You should get your answer. So 1,200 is my margin of safety compared to sales always, times by 100. Yes, it is 24%. Thank you. Those of you answering. Smart people are there. 24% is right. Those are most of you have answered me. This is a good answer. And the last one, what is the sales volume required to make a profit? You know, we want to earn a profit of £10,000. How many units do we need to sell it? Target profit formula. Look at the formula I have written for you. Who remembers it? Fixed cost plus target profit divided by contribution per unit. So we have all the information, don't we? Yeah, fixed cost was 5,700, wasn't it? Yeah, plus target profit is 10,000. Your contribution per unit was 1.5. Who gives me the answer? 5,700 plus 10,000 divided by 1.4. So 10,467, I will take the answer, yeah? 10,467, you can round it up, 10,467, boom. That's all about in this chapter, but I'd like to show you a little bit of profit volume chart and CVP chart. Look at this, making it slightly bigger for you, so you can get, so that's how you do X and Y variables. This is your FC, fixed cost. Yeah, this is your VC. So fixed and variable makes it TC, total cost. And this is your sales. When your sales covers fixed and variable cost, that's your break-even point. There's a profit volume chart. Below this level, everything is loss. Above that point, everything is profit. Maybe these charts we go over later on more, but to be honest, in this chapter, we finished everything. We have gone through, there's a multiple, we do weighted average if the multiple break-even we meant to do. So you just practice more. There are more practice. CS ratio, we have done it. And target profit, we have done it. There are some questions in between. Margin of safety, you have done it. I showed you what is a margin of safety. And a bit of multi-product, a bit of limitations of break-even there. Chapter summary, that's the end of this chapter. How beautiful it is. That's your 15 minutes today. Any question you want to ask me? Can you believe this is an ACCA book we have finished? Yeah, today. This is a big book we have finished, a big chapter from ACCA F5 Performance Management. If there is no question, you can say thank you, Elias. You can unmute yourself, Thomas, Claire, Mohammed, and we can say goodbye. This video will be recorded.
Thank you and goodbye.
Thank you, Thomas. Welcome. This video would be either on accountinglecture.teachable.com or our YouTube's would be. So hope to see you there. Bye-bye for today. See you in some other day. and maybe next week with financial accounting. Bye, Bretman. Bye, Bretram and Thomas and everybody, Claire and Mohammed. Bye-bye.
Bye.